7, 6, 5, 4, 3, 2, 1. Hi, everyone. Here we
Hello,
go.
everybody.
It worked. It's another week in the books, and this is your real estate update, market update in San Diego County.
Yeah, it's hopefully you guys had a great week. I'm sure that your travel time was lower this week due to the quarantine. Traffic's down.
So, I mean, let's just jump into it. So, I have this breakdown, this spreadsheet that I kind of put together. If you've seen some previous ones, you might have seen this. I just added one of the more recent weeks into it. You see, we had actually a big jump in new properties coming back in the market. So, as we kind of talked about before, usually the first week of the month, we see an influx of properties jumping in the market, being that maybe properties expired. Like you can see for March 30th to April 5th, we had 330 properties get taken off the market with 731 going on. Then for the last couple of weeks, we've had less off market, and then you see that jump to 324. All right, so that's usually equates to an influx of expired listings. So that also correlates to a jump in new properties that go on the market. Yet, I mean, we're talking about 527, 667, 693 to 903 new properties going on the market. So yes, maybe 180 or so properties were actually properties that are expired and brought back on the market. Yet still, I mean, a jump. Let's say it's 800. That puts us at about 100 jump up right there in new properties. It seems like people are getting more comfortable with the new norm of properties. We have that 52% jump of properties being sold. So properties are still selling, and then off markets at 36. And this is across the board. Now, if we go into the 700 market, we're going to see the same kind of thing. We're going to see that little bit of a jump, right? Where the 144s, the 166, and then also we're seeing kind of not as drastic as a jump, but we're still seeing that jump up to the 541 right there. So people are getting more comfortable putting their properties back on the market with everything kind of going on.
You know, the other thing that's interesting, Vinnie, is when you look at what's coming back on the market is the Mortgage Bankers Association released this week mortgage purchase applications up 6%. So that means 6% or more people jump back into the market to look at things. And I think the reason why they're doing that is I mean, it is all-time low interest rates that have, ever been around. And people are finally looking at it going, you know what, there is kind of a risk, but they're actually jumping out. Had you asked me that 4 weeks ago, everything was dramatically down. No one was jumping in at all. Being up 6% for the week is quite a bit of people. That's a lot of people to jump in for 1 week, a 6% increase.
Wow. So where have you seen rates come from this whole week? Have they kind of sit where they're at? Where they've been?
Yeah, this, I got to say, I mean, I don't know who out there remembers the last time they were eligible to get a 30-year fixed at 2.875%. And that's for loan amounts below $484,000. But still, that's costing you a little bit of money to buy that. Let's say 2.875% has an APR of 2.95. That's nothing because it's very likely you will never ever see that again. And other rates for your loans that are above 484, those are still up around 3.25 to 3.5, which is still utterly amazing. This a bigger picture thing is people are finally looking at it going, you know what? I got to jump in and I got to take a risk and do it, because where there's no risk, there's no reward. And yes, it is more risky, like you said, to kind of do this. And there's more people slowly putting their houses back on the market. The reality of it is if you're a renter, what's for sure is the rent goes up. So why not try it? I mean, the other for sure thing is death and taxes, but nobody cares about that.
And going back to the previous idea too, I mean, if we look at active properties on the market, we're still sitting at that under that 5,000 mark. We're sitting at 4,800. I think I want to say it was Monday we were sitting around that pricing too. I mean that inventory wise, and with the under 700, I think we're around like under 2,300, around 2,300, somewhere around there. So here we got a question. We got a question for you.
Are mortgage rates fluctuating more due to COVID, or are they relatively stable? Well, Michael, that's a good question. The reason why mortgage rates are where they are, it's actually not because of COVID. It's actually because the government stepped in and decided to start buying mortgage-backed securities. The reason why the government did that is because that prevents basically a run on the banks, and it enables capital to keep flowing into the economy, and it enables people to actually buy in a time when it's considered very stressful. So great question. I hope my answer wasn't too long, but the reality of it is it's the government buying mortgage-backed securities that force the rates so low. And why do they do that? It is because of the virus. So if you go deeper into your question and go, what happens if a cure for this virus comes in the next 3 months? Ooh, chances are rates will go up.
Yeah, I mean, I think it's going to be still very difficult. I mean, we talked about with basic inventory. I mean, sitting at 4,800, around 2,300, under 700,000. Again, last June we were at the 7,800 mark, so we're still close to that halfway mark of inventory. I want to say we're selling at somewhere around like 2,300, 2,400 a month. So I mean, if you factor in that, 4,800, we have about across the board around 2 months of inventory. In a balanced market, we want about 6 months of inventory. There you go. So, I mean, in San Diego, we're just so swayed towards the seller's market, even with everything that's going on. I mean, we're still on that. So if you think right now, oh, it's a buyer's market, I mean, I don't have to put an offer on this property, I can put a lowball offer on this property. You might want to just really double check the numbers to make sure that you're on the same page with the actual market, or talk to a professional.
Yeah, don't talk to a rookie that doesn't really know what they're doing. The thing that also I was going to share this week, Vinnie, I saw on a couple different purchases, they all came in short on their appraisals. And this is something me and you talked about in one of our updates, prior, is appraisers are now doing exterior appraisals, drive-bys, and they're looking at the videos and the photos on the MLS. And if the agent did not do a good job at doing that data and you wonder why your appraisal came in short, there you go. The other thing that I kind of talked about when you mentioned inventory, Vinny, is we haven't really seen yet what's going to happen with the small business owners and opening back up. So I think you're going to see more properties come for sale when these small businesses that have been utterly decimated by this come and go, you know what? I can't open my business back up again. I got to sell. And what's going to happen with those properties? You think we're going to get more of an influx?
You heard they're doing what, Maribel? I thought I just put a question out there. Curious. But yeah, I mean, one thing that came out, soup plantation, huh? Soup plantation, turning the doors.
I mean, think about if you are a small business owner that owns let's just say the nail salon, choose that one, and you haven't been open for 2 months, and you have no income, and you live here in San Diego, and you've been decimated, but yet your house has $500,000 in equity. Are you going to sell that house and go somewhere else and do the business over? Or are you going to start from scratch and do it again? There's so many unknowns right now that are going to go on where I think more properties will come for sale. And I did read something else where there's some people predicting that home prices will go down here by 1% to 2%, which is really nothing. But 1% to 2%, I think you may see that in certain properties, like in certain ranges. I wouldn't be surprised if you get 5% decline in property values on properties above 1.5 million. I know we're getting close on time. Sorry.
Yeah, no. I think it's great insight. I mean, we'll have some more stuff to talk about. Also, too, if you're watching right now, make sure you join us for tomorrow's investor seminar. So if you want to buy your first investment property, tune in tomorrow we'll walk you through the process of doing that. Yeah,
that's going to be a good one. Good time to make money right now, especially if you can buy a good investment at a good price. Wow. Good times, my friend.
All right. Thanks, everyone. Hopefully we'll see you tomorrow. And for the market updates, please subscribe, tell your friends. We'd love to hear your feedback.
10 a.m. tomorrow.